Welcome to the Farms in BC podcast. Today, we'll be going over our second quarterly market update for 2025, and there's a lot to go over. We've got our new Prime Minister's first few months in office. We have the current state of tariffs to go over, as well as the latest rate announcements from the Bank of Canada. As always, we'll be discussing how these current events are impacting buyers and sellers here in the lower mainland of BC when it comes to acreages and farms. Stay tuned. Well, Nav, it's summer 2025. We're just finishing up June here, Q2 of 2025. Of course, there's a lot of changes that happen here. We have a brand new Prime Minister, Carney. I would love to get your thoughts on him, but of course, we also got to get into the tariffs and how he's been handling the tariffs alongside Trump and kind of get into the details of that. And lastly, of course, we'll go over the Bank of Canada rates, and then we really got to dig in and what does that all mean, right, for all our clients, the buyers and sellers. Yeah. So, Carney, what's your thoughts?
Overall, you know what, it's he is the Prime Minister now, and I think he's been handling it pretty well as he's come in. I know he's been trying to get a lot of the premiers together just to open up the barriers for provincial trade. I think it's going to take time. I think we won't really know the results of how he's going to perform or what he's going to roll out or how he's going to impact Canada as a whole. We're going to have to just trust that he's going to do a good job. But, he's got majority, which is a good thing. And let's see how he progresses now.
I like the approach he's taking. It's calm, cool, collected, right? He's going in, he's hearing him out, and he's not, trying to stir the pot or anything like that. He's listening, but at the same time, he's being firm. Obviously, we wanted to see, obviously us fighting back, but at the end of the day, we have to be tactful as well how we handle this, and I think he's playing that part well.
We're not a big powerhouse to put our fist down and make demands and things like that. So Canada has a role where we got to move with caution and I think everybody knows that. I think the markets are showing that there is some instability because of that, but I think time will tell. But I think it can't get any worse than what we're seeing that have been seeing in the last year. So hopefully, they'll come to the table within the next, 6 to 12 months, and we'll get a new deal, and the markets will finally get their stability that they've been looking for.
Yeah, just continuing off our conversation from our last update, we were discussing how potentially by the end of this year is when we're thinking that it could, potentially iron out, right?
Yeah.
Where, maybe things will pull back from the tariff side of things, and hopefully we have stability, right? Because right now it's all unstable.
Well, the thing with Trump is, even say if you have, until that new deal is not signed, anything can happen. This week it could be tariffs, next week could be no tariffs. So it's out of Carney's hands, and it's out of the public's hands. So until we don't see some consistent stability with the U.S., I think we're gonna be in this limbo mode. But one thing I do like about Carney that he has been doing is he's been reaching out to other markets. And I think a lot of countries are going to start not relying so much on the U.S. and they're going to try building their own trade relations amongst themselves. So, there are going to be more deals to be had, better deals to be had. Bigger or more markets potentially, Europe, Asia, see if we can send a lot of our goods and materials over there. There's more talks about these pipelines to be open, tapping into more of these minerals of ours, and hopefully they just execute, and I think time will tell. I don't think no one has a crystal ball. Nobody really knows on if they're going to approve and how long it's going to take to get these things off the ground.
Yeah, and even the premiers, some of these guys are becoming very front and center in the news as well, because they're being very outspoken as well. Like the Alberta's premier, we have Manitoba and Ontario actually communicating very well, and they're making a free trade agreement between their two provinces there, right? So I think that's just going to continue to grow, and I know Alberta is having they're pretty outspoken in terms of what their strength is in Canada, and they're wanting to leverage the rest of Canada as well, right?
Yeah, so, they would like to get their resources out to the world.
Yeah. And I think that's a good direction for us for sure.
Yeah.
We're just utilizing Canada for what Canada can be.
Yeah.
Right? All of it.
And I think we've got huge opportunity. It's just, will the provincial, federal governments drop the red tape and allow companies to actually thrive?
Yeah.
I think if they do that, I think if they remove 4 buyer bans for purchasing, I think if the interest rates come down, there's so many factors that can turn the market hot again just based on policy. And I think once these policies, if they change some of these, reverse some of these policies or lighten up on some of these policies, things can pick up really quick.
Yeah.
Yeah.
Have you seen anything specific to BC? Obviously, what we do is exclusively BC, but in terms of acreage, farms, in relation to these tariffs, anything that's kind of impacting us?
I think it's all tied together. Real estate's bought based on affordability. A big part of it's psychology. If people feel that there's stability, their businesses are growing, there's good cash flow, markets are doing good overall, they tend to take risks. And without those things in place, people are pulling back. They're not willing, even if they can afford to buy certain assets, they're not taking the step forward to take those risks at this moment. And that's why we are in the current market condition that we're in. It's not the fact that there are no buyers out there. As you know, we still get calls from a lot of buyers that are looking for farmland. They're just very trigger shy to actually buy anything at the moment because of these certain factors. Now, we know interest rates are going to potentially come down. We know that. And we may get 0.5% or 0.75% down by potentially by the end of this year. That's what some of these economists are saying. But so that won't be a factor. Now it's the stability part. It's the confidence part. It's the economy. How long is it going to take the economy to start turning again? Is it 3 months? Is it 6 months? Is it a year? Time will tell.
And we're also in the lower mainland where in general, the prices are astronomical compared to any other type of farmland in Canada, right?
Yes.
So obviously there is an inherent risk factor there, right? So
that's
why we're impacted by the
we've
tariffs so
seen prices across the board probably decrease anywhere from some pieces from 25, I'm going to say as aggressive as 35% from the peak of the market of 2022. So overall, the way I'm looking at things is we've seen a decrease in prices on average between 8 to 10% over the last 3 years. And that's been the trend. Now, when is it going to stop and when's it going to stabilize? I do feel that we're pretty close because the calls are being more aggressive. People are starting to write more offers but new price points are being set. Yeah.
Even so, there's still some heavy-duty, big-ticket items that are coming on board as well. We're talking like multi-million-dollar properties as well in terms of that have never been on market before, right?
Yeah.
And this seems to be something that's stemming also from the instability.
Yeah. But you know what it is? We are at record levels of farm inventory in certain pockets of the valley. Abbotsford, it's at its peak inventory. Langley's at its peak inventory. The places that are not high in inventory is Surrey, Richmond, and Delta. And you'll see those areas where you'll see prices stabilize a lot faster because of lack of inventory. Langley, Abbotsford, Mission, Maple Ridge, their inventory has spiked so hard, you're going to see downward pressure in prices. And you've already seen it. We're seeing it in the sales. We're seeing it in the offers. We're seeing it even as we list. We're listing it at rock bottom prices. Chilliwack is still pretty good. You're not seeing a huge spike of inventory there.
And Chilliwack has there's a lot of farms out there. They're all big ticket farms as well, and they're established farmers typically.
Yeah, and that's why you're not seeing them really.
Seeing the bigger,
they rather just, if you are, and we're seeing a lot of people that want to still sell, but they're not listing because they're in no financial need to sell, or they can afford to wait for a year or 2 years, or wait till the prices go back to where they feel they should be or comfortable.
It's almost like we're waiting for the perfect storm where rates come down, the tariffs are resolved, prices come up again where you know sellers feel comfortable selling and where the buyers feel comfortable buying at the same time, right? These four factors are not going to get hit right now. They're not going to get hit for the next 6 months probably.
No, but these prices where we're at today, I believe we are back to I'm going to say between 2019 to 2020 pricing. We're back to that now. Some of these price points that I'm seeing that are coming to market, if you're overpriced, the inventory is not even getting any phone calls. You have to, in this type of market, if you're a seller and you make the decision to put your property up for sale in today's market, you need to be priced correctly. Even if you're priced correctly, you might still not get as much activity. If you're overpriced, you might as well not put your property on the market. And in order to get the right pricing, call 2-3 professionals that are specializing in this field and get pricing so you know where the true price should be. And then pick, obviously, a realtor that specializes in that field. And that goes the same thing when it comes to townhouses, condos, farms, development property, industrial property. And that's the other thing. We're seeing a lot of realtors that are just quitting the industry because they were lucky to get that one buyer and then they ran with them and then they were the residential specialist, the townhouse specialist, the development specialist. In this market, it doesn't work. The seller needs to get the right professional advice before putting on the properties for sale.
And we're having that issue where, you know, there's abundance of people that want to list. It's just a matter of their price points, expectations.
And I think what we've been doing is we've been very straightforward. We haven't been taking on listings where we overprice or even overpromise. You know, I know in our industry, it's really known that let's get the listing and overprice it and then we will reduce it. What happens is you're hurting the seller and the value of the property by doing that. Instead, come out very strong, come out at a very aggressive price because you want to sell. That's why you're listing. And get the most activity on it as soon as possible and try to find a buyer as soon as possible. That market where we, list high, see what happens, this is not the market to do it in. In Langley, I kind of just pulled out a lot of the active properties. In Langley, right now, we're between just 2 to 40 acres because that's kind of where a lot of the buyers are looking. There's about 67 farms for sale in just Langley. And in Abbotsford, vice versa. In Abbotsford, there's 67. In Langley, there's 106.
Wow.
And that inventory keeps climbing. Now, majority of all those listings are all overpriced for today's market. And that's why they're not moving. So when people are saying, these properties are not selling, it's because they're overpriced for today's market. And in order for, it's to educate these sellers that, hey, this is where today's price is. We listed this 6 months ago or 3 months ago, but today's price is at a different level. So you have to educate, and hopefully they listen and they reduce the prices according to where market is. Now, if they don't reduce, the properties will just sit there and get no action.
Then it comes down to buyers as well. I mean, there's a lot of buyers that are wanting to buy, right? I mean, obviously there's so many options out there, right? But you got to come within reason as well. I mean, obviously there's people that are going in extremely lowballing, and I mean, it's the right time to do it. It's the buyer's market at this point.
And they're trying.
And it's a good time to do it.
But we've right now, I think we
have multiple properties.
We've got about 8 accepted offers at the moment. Now, we don't know what's going to go through or not, but the price point of where we started when we listed about 6 to 8 months ago to now, the price points are off by a lot. Yeah. And at that time, we thought we priced it correctly, which the prices have come down. And the market shows for it. And now I think from now till the next 6 months, you're going to see what the true market price is for a lot of these products and inventory. And what I've also noticed is that things that are more bare land, those prices are coming down faster and they've taken a big hit. Things with a decent house or a livable house or a move-in ready house, those prices are staying a little bit stronger because someone doesn't have to build a house, don't have to go through the permitting process. It's easy to get financing.
Lower down payments.
Lower down payments, yep. Yeah. And we're also seeing that Anything, again, we've been saying this for almost 2 years now because it's been the trend. Anything under 10 acres, that stuff is still having decent activity if it's priced correctly. Anything over 10 acres has been the challenge.
One thing that everyone wants when it comes to acreage is some sort of cash flow, some sort of justification for being able to afford it, or some sort of mortgage helper.
Yeah.
And there are options out there. There's a lot of sellers that want to sell, have already informed us that they have a price in mind.
Yeah.
They're not ready to go onto the market because they feel the uncertainty of the market, right? But we have that number in mind. If a buyer was to reach out and they wanted a certain criteria, of course we would try to connect the dots, right?
Yeah.
But it's a matter of now having the right buyers coming in, right? So obviously I think that's the next step, right? So having them reach out.
But I think with the buyers that are calling us now, that are going out for showings, that are writing offers with us, there's a lot of subject to sale. They need to sell a house, they need to sell 2 houses, so there's a lot of that going on where subject to sales is sellers need to accommodate buyers freeing up equity in order for them to move forward and purchase. Because if they can't, those buyers that really like your property that want to purchase it cannot buy it. And you just have to make sure that the buyers that are putting those subjects to sell. So we just did one in Pitt Meadows. We got the offer accepted. They priced the house so sharp that they sold within a week. In a market where houses are still taking months to sell, but they priced it so good. So they were serious buyers for a specific farm. So what they did was they priced it very sharp. But if you look a year ago, that farm that they purchased would have sold for about 150,000 more. So they took 150,000 less at their house. So it was all relevant. Didn't matter. As long as the buyer's educated and understands it, and that comes down to the buyer's agent pricing their property correctly and advising them correctly and explaining the numbers to them.
And a lot of the purchases here in the Lower Mainland are very much reliant on a sale elsewhere to use the funds to make the purchase, right?
Correct.
So I mean, this is something we have to be aware of, right?
Yeah.
It's not the days anymore where your income is enough to
just go get the loan.
just go get the loan and get it done, right? But unless you got a good business, it's a very tough thing to do. So anyway, that's one of the things that we have to make our sellers aware of, that we have to accommodate.
And inventory is going to be the key factor of how fast the prices go up. It's not going to be interest rates anymore. Mm-hmm. People keep waiting for these interest rates to come down, and they're like, oh, once the interest rates get to X, market's going to take off. If the interest rates come further down, the market's is in a worse position. That's why they reduce interest rates. It doesn't matter if the interest rates come down 0.5% or even 0.75%. If inventory is at its all-time high, prices are not moving. And in order to clean out all of this inventory that's on the market, plus people that are off the market that do want to sell, which are going to come on the market in spring of 2026, inventory is going to be the key factor of when prices go up. In my opinion, I don't see prices going up till at least 2027, 2028. And I think until the sellers don't realize that, and it's all inventory based, it's basic economics, supply versus demand. If there's an abundance of supply and not enough demand, your price point of these acreages will not go up. And I think getting that knowledge and education across to the sellers is very key and important. Instead of giving them false hope saying that, hold on to your property, the prices will go up next year or the year after that. You need to be upfront with them, educate them, and then also explain to them opportunity cost. And sometimes people just have to sell based on life. Someone passed away, it's getting too hard to maintain, kids don't want to do it. There's so many factors, and those are the conversations we're having with a lot of the sellers, right? And if they're not happy with the price, we'll revisit it next year. If they're not happy with the price at that time again, revisit it the year after. But falsely telling these sellers that you can get X when they can't, and then you go on market and all you see is reduction, expired listing. You put it back on the market again, expired listing, and you go through this cycle, and next thing you know, you've got this bad stigma on your property for a year, 2 years. You've done nothing besides hurt the value of your property when you were not ready to sell it at market value. This is not the time to play those games. If you're a seller and you're listed, you need to be serious. And you need to understand your highs and lows. What's your worst case scenario sale price and your best case scenario sales price. And they need to be happy with that before you put it on market. So the last, I would say, 7 to 8 listings we took here in the last, I'd say 2 months, we've had those conversations. Do not list if you're not happy within this range. Because if you're not happy, do not list. And we've only taken the listings where they are happy within that range. If they're not, we've actually lost the listing. They went with another realtor, and that's fine. Because
I mean, these are hard but necessary conversations. I mean,
well, the thing is, it's truthful.
Yeah.
It's honest. It's upfront. Some realtors that are not as busy, or they'll just take whatever they can to put up a sign and advertise themselves versus actually doing right by the seller. And I've been seeing a lot of that in this market, where people are just trying to put a board up so they can advertise themselves that they're busy as an agent versus actually trying to sell the actual product.
Now, it seems to me that just based on how much inventory is out there, even if the tariffs are resolved, I feel like there's going to be a little bit of a layover time period where anything is going to be...
Even if tariffs get fixed, let's just say we wave a magic wand and the tariffs get settled and finalized. You have to start this engine called the economy. And in order to do that, shipping would have to increase for truckers to start getting that going. You need construction permits to start being issued and actually start digging holes so they can start so tradesmen can start getting busy, which will get the finance guys busy, will get the realtors busy, and you would need to get trade, just everything. It's gonna take, even if we come to a trade deal, you're still looking at 3 to 6 months for the engine to get roaring again. So this whole notion that in 3 months, in 6 months, no, this is gonna take years. And until you don't grasp that, you're gonna be sitting there falsely hoping that this is gonna turn around faster. It just can't. It takes almost 6 months to a year in markets to buyers' confidence to ramp up. There's so many of these policies that Canada and BC have that just restricts businesses and the economy to progress. And until these trade policies get finalized, interest rates, until all the stars don't start aligning again, people are going to be very cautious. There's some people that I know that have been getting calls lately, and they're saying to me, Nav, just sell my property. I don't want to take on any more loans. I'd rather buy something that's smaller where I have no debt. And I don't care if my business is booming or not. I want to be debt-free. Because a lot of farmers have a lot of equity in their assets.
You know, it seems like in comparison to tariffs and in comparison to like the elections, interest rates are actually taking a back seat. I feel like that's a lesser important conversation because at the end of the day, 0.25 up or down is not going to make as big of a difference as these bigger ticket items.
Yeah, I think the biggest ticket item that's going to turn the economy is going to be policy and red tape. It's not interest rates.
Yeah.
And the tariff situation, say even if that does get settled, we're still looking at 6 months to a year. So, you got to be doing proper strategic planning when you're buying and selling.
So what's your message for sellers in today's market? And conversely, we'll discuss buyers as well.
For sellers, I would just advise them to get the truthful advice, where the current market is, what to expect. And if you're not happy with that information, do not list your property. Only list your property in this market if you're okay with the price range of your true today's market value.
It's also good to reach out and get a free evaluation done, whether it be now or even, and then once again, perhaps in 6 months, just to kind of see the difference.
We've been doing about 4 to 5 free evaluations, people that we've done evaluations for before, plus new people. And these are the conversations we're having. Some are very upset with the prices that we're providing them, but that's where market is at this time.
Yeah. It's not a fun conversation to be had.
No,
where
but
you're
you know
telling
what
them
it
it's
is.
less
What I've
so, but,
realized,
that's the
it
reality.
was more difficult 3 to 6 months ago,
Mhm.
but it's been happening so often that I feel that the sellers are starting to understand.
True.
Right? It wasn't that a realtor is trying to come in and undervalue your property to make a quick sale. This is facts. These are the numbers. These are the challenges. These are the sales. And that's what we're seeing now, is that sellers are actually listening. Sellers that we're talking to are realizing, okay, I need to make an educated financial decision here and see, is it worth it taking the worst case scenario?
Mhm.
Because that's the situation we're in at this time.
The reality is they have their eyes and ears open. They're seeing what's on the news. They're
Correct.
seeing what's happening. It's kind of hard to avoid,
Yeah.
right? So they're finally kind of seeing the light.
Yeah.
It was 6 months ago, perhaps maybe in December, January, where we were thinking, oh, you know what, maybe it's gonna upturn again. But
because we were so busy.
Nobody can predict these things.
Yeah,
right?
and
So,
we were so busy from November, December, January. When this tariff talks started happening, the fear started coming in, and then interest rates. Like, yes, we've had some good reductions, but we've just had two held rates. People are predicting faster reductions in interest rates. If you look at even fixed rates and variable, they're the same right now because bond yields are so high. It's going to take time. Nothing is going to get fixed this year. It may not even get fixed by next year, right? And now where does this all settle? It's all going to be based on what the federal and provincial governments, how fast they can deregulate all the stuff that they've put in place to regulate businesses and economies and taxes. And they really need to come out and change a lot of stuff they've put in place here in the last 5 years.
Time tested advice is hope for the best, but plan for the worst, right?
Yeah.
And I think that's the one thing that sellers should take to heart right now.
Yeah.
Now on the buyer's side, obviously opportunity is afoot here. So
it's they've got the pickings, right? So we've been writing offers for buyers, and right before I send the offer, we are calling the listing agent saying, this is what we believe market value is. And some of them are not happy. Some sellers are not happy, but and some of them haven't countered any of our offers. Those parties are still on the market and they've been reducing their prices now. And it's okay to put an offer in. I think this is the one market where you will not offend any seller and you will not offend any listing agent. If you're a true buyer and you have cash, you're going to get some really good deals because there's a lot of inventory to choose from. Here now you can get picky. You can be very selective. You can be patient. So the buyers that we're working with, that's the advice we're giving them. Be patient, be picky, negotiate hard. And they are.
I think the only time that's maybe not the right advice is when it's at the very bottom of the price point and the very highest. Those are a little bit more unique and they have to be a little bit more strategic. But when you're in the middle of the pile where you're looking at 5 acres, there's 5 acres here, there, and everywhere. So I mean, it's really a matter of take 5 options and shoot your shot, right, and see where it lands. And there's other options out there if it doesn't work out.
That's right.
So I guess where is the most action happening right now, and what price point is it really in the ballpark?
So what we're seeing is a lot of the 5-acre price points now are between 2 and 2.5. So with a house, that's where we're seeing the most activity, is that if it has a livable house or even a rentable house on 5 acres, the price ranges are anywhere from 2 to 2.5. That's the sweet spot that we're seeing a lot of the inventory get action. And that's across the board. That's in Abbotsford, Langley, Chilliwack, Surrey, Pitt Meadows, Delta, Richmond. That's kind of where we're seeing most of the activity. If you look at some of the specialty products, if there's an estate home, but priced really, really well, you're getting still a lot of action. There's a lot of buyers out there that are looking to buy an estate home on acreage where they don't have to build and it's move-in ready. If it's a good quality product built really well and it's priced very sharp, it will sell.
So now, as we move into Q3,
Yeah.
what can we really expect?
I feel that we might get one more cut of interest rates. I do believe that inventory will continue to grow, but I think there's going to be. I think that by end of Q3, you're going to see a flat line of inventory, meaning whatever's on the market for 2025 is going to stay on the market at 2025. I don't think we're going to see much more inventory. Most people that sell farms, they list their farms between February and June. Because they also know that it's going to get slower between October to January. So they try to put enough time for marketing, right? So I think inventories is going to level off. I don't think we're going to see a massive more spike, but I think more inventory will come, but slightly. I'm a little bit more optimistic because price points have come down so much that you're going to see a little bit more sales in that 5 to 20 acre range, because the prices have come down so much.
Yeah, I'm optimistic for an active Q3 here, but we'll see how it goes.
Yep.
And I guess I'll catch you on that next one.
Okay.